Hi guys, today I wanted to go through, you know, also in addition to the stock picks I was sharing to you, also I wanted to talk to you about some of the stops or the losses I've made so far this year. I have multiple brokerage accounts that I trade with, and overall the purpose of this video, like any other video, is for education purpose only, and these are not recommendations to buy or sell equities or any investment products that I'm sharing with you on my channel. Please consult your financial advisors or your financial or your CPAs or any accountants that you work with. Contact them or your financial firm that you work with, or else you will be at your own risk. And I or my channel will not be responsible for your loss. So be careful out there. Do not simply follow anybody or any investment guru who talks about, or talks about making money or investment ideas or tips they give you. Please do it at your own discretion. So educate yourself. That's the best thing to do. So let's talk about some of the losses I had went through this year. Before even I started or started trading this year, mostly I was a value investor. What do I mean by that? A value investor is a person who looks for low price to earnings, or we call it as PE ratios, and stocks which have performed well over the years. And when you find that these leading stocks, which were leading once, started sliding down all of a sudden and presents itself a very good potential as a value due to its earnings. Earnings will not grow generally for these companies. The earnings are there, but they have still the potential to grow because of their earnings. Even though if their earnings are, slightly below the Wall Street estimate, they still make money. One such example was Gilead Life Sciences. Initially when I purchased I purchased Gilead for a reason for holding it for the long term. One of the key elements for being a value investor is you have to hold these stocks that you buy at a low PE, which has still these are genuine companies which make money. You need to understand these value plays are for the long hold. That's why they are called as value plays. Like Warren Buffett is one of the greatest value investors. He knows what he's doing. Not every one of us, like people like me, know or do research as good as these major value investors. And talking about holding for a long term, I haven't held this stock for a long term, but I did make good money with this name, in the previous years. But at that, saying that, these picks were basically based on the idea that you are a value investor and you're planning to hold on to the stock. What I observed is like, eventually this year and even like from last year, being a value investor doesn't make you a lot of money. This is a point I have to bring up, and this is something which I observed. And it doesn't mean it's the same case for anybody else. For me, I think I like to be a growth investor because that's where the stocks these are the stocks where might be the next set of leaders, or stocks that come to be the ones who will be leading the market, like as we see it right now. You see, these are the stocks that were leading the market. There could be many others similar to this, like Google and all the FANG stocks, etc. The reason why these are being there is for a reason, right? Like these are the ones which are growing, and these stocks have done tremendously well over the years too. And that doesn't mean these stocks will lead going forward. There will be a time where new companies will merge, new technologies will come up, or maybe new sector comes into play, like how the shale play used to be in the year 2013, 2014. So, talking about value versus growth, I prefer to be in the growth side for now, at least. That's where I see the majority of the stocks making the big gains. Okay, now the whole topic of this video was going through some of the realized gains or losses that I made this year, and also see how I did it so far, like what made these losses. These are not simple losses. These are losses where I had to take the loss because I have the rules, right? What is the rule? 6 to 8%. So these stocks were around close to 8% loss. So whether I was a value investor or a growth investor, I started following these rules. And these rules I started following were from last year. There was the year before that and all. I just traded randomly, even though I had lots of years of experience trading, I traded randomly. I never cut the losses with a specific rules. So in this case, these were 6 to 8%. You see a huge loss, right? Like close to $3,000. But based on my account size, this is still not a huge loss overall when I compare it to the gains I made. But stops are stops. They are kept there for a reason. So I had to follow. This was close to 8%, I believe, 8 to 8.5%. That doesn't mean it was all loss. Like if I had expanded this and shown you, I had made a couple of trades where I was profitable. Because I don't initiate or put all the money in one stock, right? So, and when I purchase, I buy in small quantities, basically. And the reason why I do it is because maybe I want to purchase the next set of shares in the next trading day. I don't want to purchase everything on one shot. Sometimes I do that. And also, uh, averaging down is never a good idea, and I don't like to do it. This is a very rare case. Like I buy, like instead of buying all 100 quantities today, I buy my 50 quantities. And since I was a value player, the intention is to buy at the lowest price for a stock. And that's how I got involved with this name to begin with. Anyways, same thing with Calamine. I ended this at 42 and I had to get it out around 38, I believe, or so. I didn't, if I expanded, I would have shown it to you, but I don't want to go through my account to show it to you guys. I just have taken a picture instead. Okay, these are some of the losses I made, and you see here are the um, losses aggregated, but I've hidden all the other details because I didn't want to show how big my account size is and all that crappy stuff, which I don't want you guys to be even knowing. That's how it is. And if you see, like for example, basic energy services, this wasn't a stock where I was holding it as a value play or something like that. This was a stock. There are stocks in this portfolio where I also short. I'm not just a guy who buys stock, I short stocks too. This was a case where my short thesis was wrong. This is also a case where my T-Mobile was also a case where my short thesis were wrong. So it depends again, like, what do you plan to buy and short? The reason why I would have shorted this is because the trend of this particular stock was down, and I do not short a lot of stocks. I do have good gains when I shorted stocks too. Um, I will not be covering my thesis on shorting right now or in this video. Maybe down the line I will capture that. So these are the few set of stocks that I made losses overall this year. This is just for this year, okay? And I will take the loss. 6 to 8%. Maybe even it could be, randomly a day it gapped down and it could reach maybe 9 to 10%. But I do take the loss. The only exception to that rule is I will not take a loss if the trend is already above and it was just like shaking you out. And the price is still above, like in this day, the price was still above 20-day moving average. All right. And the RSI is weak. I might wait for a day or two to see how it still reacts. A day or two, and if the price still doesn't break down the low it made, maybe it can gap down one more. And if it still, you see, like in the second day it was still trying to shake out people, like in the case of Tesla, and it did go gap up and then it gapped up. So you have to give it time. Sometimes it doesn't mean you have to strictly take 6 to 8% that same day it happened, you had to come out. Even though I never played this, I'm just giving you an example. Like 6 to 8% is a rule, agreed. But if it just gaps up for some odd reason or a shakeout, sometimes maybe you can give that leeway of like maybe 10%. It depends on you and how you want to control it. And if you see a follow through, let's say if this day was definitely a down day. Let's say the follow through day was also a down day where you unexpectedly happened to see the case and it did close down, let's say here. I'm telling you, definitely get the hell out of the stock. You don't know where it's going to go. Maybe it'll bounce back the following day, but still, you had a follow through happening. So mostly there is a chance that, the trend is going down. And what way to confirm it other than comparing it to the SPY, right? If the SPY itself is was trying to break down, probably then that's it. You might want to get out. And maybe you have better opportunities, maybe shorting stocks. That's a perfect way to do handle things. For example, DICOM. Let me tell you about DICOM. When I entered DICOM, I'll tell you this is a perfect example where I took the loss. I entered somewhere here and it did break up above 110. I didn't come out of the stock because it was following all my rules. But what ended up happening? Earnings came into picture. Stop gap down. And what I did was I was thinking of seeing, I believe I held on to that day or, see the next day action. What happened the next day? It slowly started gapping down. So I had to eventually get out of the stock around 89 or 88 or 90, somewhere around this price range I got out. No, I believe it was somewhere around 88 because I knew it clearly f- f- fell through. And what ended up happening? It did crash all the way to 81 and then it bounced back. Does this mean I'm going to go and buy the stock? No, I wouldn't be buying the stock at all. RSI is below 50. The other set of rules below 50, above 200. Nah, doesn't work for me. I'm out of this. That's what happened. I took the loss. I gladly took the loss. And one good thing for me, I'm still following my rules. I have diversified my position. So this was just one of my positions, right? So that's how I saved myself from this horrific crash that happened on DICOM. Okay, now let's look at the winners. These are not just my set of winners. The list keeps going on because I keep trading a lot of stocks. The list is big. The list is never small. But my loss that I made on this account were these. This is on one of my Merrill Lynch account. I trade with multiple platforms. The reason why I use Merrill Lynch is because if you are a platinum customer, platinum tiered customer, you get 100 trades per month for free. So I have made use of that being a platinum customer, so I get the trades to be free. So don't think because I'm trading that, I'm wasting my money on brokerage. No, it doesn't work like that. And the other platform I use is Interactive Brokers. Their commission is very low also. And since I'm diversified, I do not, trade more than, let's say, a certain amount where my brokerage fees is enormous. So for me, it works out well. And this is the account that I use these two. In addition to that, I use two more. The other one is Robinhood, and the third one is Trade King. Now it's a part of Ally family, ally.com. I use that. Robinhood is also a great platform. Free trades, no brokerage commissions. Ally.com it charges you around 495. I have kept it. It's a small account, and it has been there with me for a long time. Like initially, before all these new features or the new brokerage commissions were introduced back then, it was like the cheapest 495. You know, TD Ameritrade used to charge you around $10 around that time, and I still use TD Ameritrade, but not to trade. It's just to see all the charts. This is a very good platform to see the charts, like you can see over here. Okay, coming back, and it's a very good system. Think of Swim. Trust me, I like it. Okay, now to the gains. See, if you are good in controlling your stop losses, you can definitely be good in controlling your gains by making use of other stocks out there. I've traded all these names back and forth, back and forth, back and forth. It's not just one trade like what you see. Oh, I got so much money in Alibaba. No, it didn't happen like that. I scalped a couple of times. Couple of times I swing. When I swing, I generally take maybe a week time, maybe a week's time, or a 2 weeks time. It depends. Some scalps work on the same day, or it can be 2 days. I do not know whether you want to call that as a swing or a scalp. For me, short term means scalp, little longer term means or a medium term means swing for me. And I lock in my profits. Some of these names are not that great. of an investment opportunity for any of you. Like, do not go in and trade a 3x leveraged ETFs. It's not a good practice. You should only do it if you know what the hell you're doing, because the moves are very volatile and it's just not easy to trade these names. So, a couple of names that I am trying to take a snap at or is taking actively a trade in STNA, which is 3x leverage of a small cap. And this is a topic which we can also discuss if we are interested. If you guys are interested to learn more about, you should make use of this only when you think the sector is really useful enough uh, to participate or to make a trade like this. And never make use of the 3x to extent where it should be used as an investment product for your long-term portfolios. Never do that. Never make use of that. It can be used as very short-term trade for very short-term swings. You can make use of it. It's a very good. It'll mimic 3x, three times the performance of your regular small cap. So the return is awesome. Like, let's say here it is 0.66% on that day. What did our 3x do? 1.92%. So it's just 3x times. Now I have heard like there are products where it is 4x. Please don't go in that direction. At the max, you can trade the ETF directly IWM, and it depends on how well you can control and trade these. This is not a sector where you want to fully put your money in. Please don't do that. That's my advice, at least. And I'm not here to tell you to do it or not. That's up to you. It's up to your discretion to talk to your financial advisor to do that. So let's see some of the trades I made. I traded Alibaba a couple of times. I scalped, I swinged, you name it. That's how I ended up having a great profit over here. Same thing with biotech sector. Swinged, scalped, whatnot. If I had held on, probably I can even make more money, because I think now biotech is slowly coming back to the market. But I just don't follow a thesis for a long term. No, I'm a short term guy. Similarly, these are all the other names that I traded, and the list keeps going on. I don't want to show you the entire picture, it doesn't make sense. But what I'm trying to capture here is more than gains, right? Is the losses. How have I controlled the losses? Gilead Life Sciences, 3. I control it around like maybe 9%, maybe. But was it a good follow through? Maybe I should have cut it before, maybe 8%, maybe, I don't know. But did I do it? Yes, I did it. The overall important point here is, did I take my loss? Yes, I did. And now, did the stock, what happened is, after all these days, now since the biotech sector is back into action, the stock has just shot up. But does it mean that, since it just shot up, that I should have held on to it? Because of these reasons, because of what I did after I got out of here, I would have made, gradually over on my trades, other trades in other positions over here, like you see. So you cannot always think about a stock and just hold on to it and bottom fish it or like know when it's going to bounce. So if you see after all this, back and forth swinging, scalping, as per till date, you can see it as per the date of, what is it, 20 whatever, or through 23 this Friday. My short term gain, all are short term, no long term. I have no clue how to play anything long term. It's just so hard for me. People say you can average down and buy a good mutual fund or a good index fund. Yes, that works. That will work. That has worked for many people, so it has to be working for us as well. Majority of them it worked. Agreed. And that too, if you are purchasing in a SIP plan, like you invest in a small way every month or so, little and have little by little on the Vanguard or the cheapest index funds that you can see out there. It's a good way, maybe. I'm not sure. I really want to try that out, but I haven't done it because I'm just not going to do long term investment right now. But that is something which I'm actively wanting to do. And the reason why I'm not wanting to do that is right now, based on my years of experience in this field, what happens when the market goes down? You're going to still average down, right? You're going to still keep buying. Maybe that works. So that's something which I'm still trying to evaluate, how it works. Because past performance is never going to predict what the future performance is. but there's a general theoretical belief that all the companies will do good overall for a longer term investment. Maybe that is right. Either ways, I'm right now not a long term investment person, so I'm still, maybe I will think about it down the line and slowly start averaging in. Like, best thing I can think of or studied is investing in a Vanguard index fund. That's it. Which mimics the S&P or the overall market, stock market. They have different ways of buying that. Like you can buy the total market index or the regular VTI Vanguard index. It's They have multiple options out there which you can diversify and just keep averaging down and invest actively on it on like on every month basis. Do not or you know things like that. There are we can maybe go over that sometime down the line. So the purpose of this video is, again, let's get back to the point. How did I control my loss? And what's the gain I made also I wanted to share. So I made a loss of 8578 with the overall gain of 28274. What did I ended up having? 19696 and dividend of 113. And I calculated this percentage to my total portfolio. It came closer to 13%, 13 to 15%, I believe. But it depends actually, again, like how you trade. Okay. If I had like followed all these new rules and strategies that I was just sharing with you guys, these are like some of the rules are really new to me because I slowly started following the trend trading methodology. Before I told you I was a value trader. When you play value trading methodology, it's a totally different ball game. It doesn't work the same way. Value investing, I believe, mimics almost closer to what an index investor does. But if you hold on to that stock for a longer term, I believe it will even, um, you know, if it's a good company, the value investing, the most important point is following the fundamentals. Most importantly, more than technicals, is the fundamentals because there is no way you can follow technicals there because the chart pattern would have already broken down. For example, look at this Gilead Life Sciences, my own live example where I traded this stock. How can you not buy the stock when it is somewhere here for a company which is holding a cash of like close to 30 billion? Now I believe it's maybe 35 billion. It has a purchasing power of it can buy any biotech companies for its growth. But what I'm saying is value investment is for the long term. Okay. And if you are onto a stock for a long term, and if you know or if you have a great information about the company, which is very hard to get, like you cannot simply go to Seeking Alpha and get some information which some analyst have put up there. You need to have also somebody sitting on board. Like the cases like how Buffett works is whenever he buys a 10% stake, most of his are like 10% stake or like gradually he heads towards 10% stake. He gets a board seat. He knows what the hell is happening within a company. So he gets more information than you and I. So they know what the hell they are doing. And provided, like example, let's take the case of IBM. He got involved with IBM for 3 4 years and he slowly started backing out because he's got maybe greater insight like not to hold on to the stock and it's time for him to trim and not have even a management seat. Instead he went in and put it into a stock like Apple, which is doing overall better than IBM. And I'm not saying like Apple could be a great stock. I have no clue. Maybe he has got better vision than me because I am a small player. I do not have a clue what's going to happen here. People like me, on the other hand, can play stocks like Amazon, Nvidia, things like these because I know the simple basic rules only, trend following. I do not know anything else, right? For example, lending tree. This is another stock which I'm trying to follow these days. All I can do is follow these stocks. I cannot follow stocks like value stocks because I have no clue. I have no clue. All I know is maybe for a value investor is look at the price to earnings, then do a little bit research, like for the case of Gilead, like you see here, the price to earning is very low. Maybe I know because this company is having good cash, it can purchase some other companies and grow. And over the last few years, like if I had a bigger picture, I could have shown it to you. Like, um, let me see. This was a good play. Like if you had, you know, held on to these stocks for a longer term, like maybe down the line it is a good stock. But like what I'm saying is, if you had held on to this stock for a longer term, probably This would have been a good name. Look at this chart. I cannot compare what it has done in the past with what's going to happen in the future, sorry. Look at it. It's going down and I'm trying to bottom fish this. I am not sure as to when will the bottom end and how much it can go up. Instead, I'm better off if I'd follow the trend, and once the trend stopped, get the hell out of this, right? It indicated to you here, here, and probably here. The trend is broken. Get the hell out. That's all I can show it to you guys. So that's about it, guys. Like, whatever I wanted to discuss, I think I have covered it. And this is basically I wanted to share with you is how did I control my losses and what is the maximum loss I've taken. The reason why this amount is greater is also because I have taken more positions on this, like quantity wise and things like that. I am diversified, but sometimes there's some extra little bit of more cash that I play into some other stock rather than diversifying and to average down, which is a very bad practice. Do not do it. That is the reason. So hope you guys enjoyed this video, and if you like it, subscribe. And if you have more ideas on what you want to go over, or if you have some better suggestions that you think you can share, maybe I can do a video about it. Maybe it'll help us to learn along the way. That would be great. All right, guys, I'm ending this video. Thank you. Have a nice day.